very, very busy days and nights for that matter. Yeah, pretty wild markets.
Well, Donald Trump says now is a great time to buy. Are you buying equities?
We have been buying over the past week. We like to buy fear. I would say after the big move that we've seen overnight in the US and then here in Australia as well, we're probably more likely to be back to taking a little bit of money off the table.
Well, it is curious that tweet that he put out on X came just under 4 hours before he made this announcement on pausing those reciprocal tariffs.
I'd say if someone in the funds management world had done something like that, they would be in a lot of trouble. But it's pretty clear that this particular president is above the law in the US. So what else can we do but have a chuckle about it and recognise that this is the world that we live in.
So we've seen moves in terms of the equity markets. We've seen straight lines down, we've seen straight lines up. I mean, the volatility is incredible. How do you position your portfolios in this environment?
It's really good for smaller, nimble fund managers like us. I think when things just go up slowly, it's very, very hard to add value. When there's a lot of volatility, there are opportunities in amongst that volatility. And I think for everyone, the message is just stick to your strategy. I see so many people being shaken away from what is a good core investment philosophy. Set your portfolio up with the portfolio allocations that you want. You can do some tweaking around the edges, but just don't make any dramatic changes. And we've seen overnight things can change very, very, very quickly. So have a plan and stick to it.
Well, we heard earlier in the program that the US essentially received quite a rebuke from bond investors. If America is losing its safe haven status, where is it safe to put money?
I think you want to own real assets. That is my view, and it's been my view for a very long period of time. That means owning shares in real businesses that make profits and pay you dividends. And there are still some great global, very profitable businesses out there for you to invest in. For a lot of people in Australia, it's property, but you want to be invested in assets that protect you against inflation over time. I still think there is no alternative to the US dollar as a reserve currency around the world. It's being put to its biggest test, I think, ever, but I would still be surprised if by the time we have a transition of government over there, anything has changed dramatically in terms of the US dollar being the base currency for the rest of the world.
And of course, your focus is equities, but when it comes to asset allocation, I mean, do you have an amount in cash?
We have small amounts in our portfolios in cash at the moment. For us, that's a tool to get out there and take advantage of all this volatility that we're seeing. That's about 10% for us at the moment.
You invest on behalf of around 2,000 clients. I'm sure you've had some big conversations with them in the last week or so. What are they asking you and what are you telling them?
My clients are very long-term and they are generally very patient. So the phone has been very quiet. They let us get on with the job in times like these. And I think a lot of people have been looking for this event. You know, it's been a few years of stock market just going up and to the right. And in general, I'd say our client base is looking for an opportunity to put more money to work. Obviously, everyone's very concerned about the economic environment, particularly for our global fund where we are invested in the US, but you know, we've got less exposure to the US than the index, and I think we're relatively well positioned for this. So the conversations that we're having are generally around consistency and sticking with your strategy and where possible, putting a bit more money to work.
Steve Johnson, thank you so much.
Thanks for having me.